Thank you everyone for joining us. We are just gonna wait a couple of minutes to give folks a chance to log in. Hey, it looks like the numbers are tapering off. No one's in the waiting room right now. Oh, someone just joined, but they'll be here in a moment. So Anne Marie, if you want to go ahead and get started.
Excuse me, is there a problem with the link, the Zoom link?
Hannah, do you know anything about that? If you're registered for the meeting and have the Zoom link, you should be able to log on.
Yeah, I've tried several times and it just tells me that it doesn't work. And then I tried to put in the ID and it didn't take it even with that. So I'll keep trying.
It looks like Allison had the same issue and had to join via browser, so that might be part of it.
Yeah, I tried that too. I
Okay.
tried to cut and paste the link into a new browser and it didn't take it either.
Sorry you're having issues with that. We can,
I had to go back and re-register and join now.
Oh no, okay.
Thank you so much for your patience, and I hope you'll able to join. Hello, everyone. I'm Anne Marie Toohey, the Acting Director for the Office of Child Care. I'd like to thank you for joining us for this training on completing the Child Care and Development Fund ACF 696T Financial Report. I'm pleased to welcome you on behalf of the Office of Grants Management and the Office of Child Care and the Administration for Children and Family. Once again, we are so grateful for all of the work you and your CCDF programs are doing for the children and families in your communities. The 696T report is one of the tools we use to understand how the tribal CCDF funds are being used to implement all of the great work in your programs. This year, the deadline for the 696T was delayed because of the technical changes needed in the online data collection systems. The new deadline to submit the 696T report is May 15th. Today's training will cover how to complete and submit the report. Today's training is the third in a series of trainings on fiscal management. The prior training provided guidance on the process of planning your budgets in a way that meets the spending requirements and tracking spending in a way that makes it easy to report. You can find links to the first two trainings in the invitation to this training. As many of you may have learned recently, the Department of Health and Human Services has announced a major organizational restructuring to serve multiple goals to ultimately streamline operations and improve efficiency without impacting critical services. Both OGM and OCC staff remain fully committed to supporting tribal CCDF grantees and the very important work that you do to serve children, families, and childcare providers in your communities. This restructuring will not impact your funding or the essential services you rely on, and we are here to provide a seamless experience as we move forward together. During today's training, we will do our best to answer questions in real time. However, there may be some questions that will need to be answered by someone who's not on the call today. We'll make sure to collect all of the questions and get back to attendees with the answers. For any questions about this training or any other CCDF related topics, please reach out to our Office of Grants Management or your regional program office. We will be providing contact information later in this presentation. We'll also be sharing the slides and the recording once they are available. Once again, we'd like to thank you for your patience during this transition period. And thank you again for being here today. I'd like to turn it over now to Brittany Tawning in the Office of Grants Management.
Thank you so much. And I just want to do a quick sound check for everyone. Can you hear me okay? Is this a little bit better? Okay, I see a couple nodding heads. Awesome. All right.
Yes.
Thank you. So thank you everyone for attending. Thank you, Anne Marie, for that intro. I really do appreciate it, and for spending time with us today. I know on your screen it says 2024, and we are very much into 2025. So thank you for your patience as we had, like she said, that delay in these reports being ready to be filled out, but your deadline is May 15th for that. My name is Brittany Tawning. We should start there. I am a grant management specialist, and I'm going to be presenting today with my colleague Cynthia Tort-Urbina. We are both from the Office of Grant Management, which is your go-to for any questions that relate to the fiscal side of your child care grants. I'm going to review this later again in the presentation, but as Anne Marie mentioned, we are in a process of a major organizational restructuring at ACF, and so due to this transition, we want to make sure that you know there's still a team of specialists ready to support you and your fiscal needs or questions. To better streamline our ability to respond to your needs, we have created a general inbox to serve as a primary point of contact for our team. So if you have any future inquiries or questions for fiscal related questions, please email ogm_occ@acf.hhs.gov. And Hannah's going to throw that in the chat for you as well. We're going to continue to do our best supporting you and the important work that you do in your communities. All right, now to the presentation. I do want to note, we have a little line there at the bottom. This presentation is intended for tribal aid agencies that were awarded CCDF funds directly from ACF. Almost all of this information that is going to be covered in this presentation can be found in the program instructions form on how to complete the ACF-696T. We're hoping to put it in a little bit more plain language and go through things in more detail, but we're also going to put that in the chat, that landing page from OCC that includes the instructions. Reading those instructions should really be your first step to understanding how the report should be completed. So it's really important that you have a link to that and that you are reviewing the instructions. The objectives we're hoping to cover today is to provide an overview of the purpose, use, and access of grant solutions and the payment management systems. We're going to take a deep dive into the specific line items and calculations on the ACF-696T Financial Report form. And then we're also going to review the new ACF-696T form for retroactive construction funds. That's where most of the changes that happened to the instructions occurred, so we really want to make sure to cover that as well. Because of those changes, we're asking, there are 35 tribes which this impacts who have retroactive construction funds. So please stay tuned for the entire presentation to learn about that new reporting structure, because we want to make sure that we're capturing that for you specifically. All right, with that, I am going to pass it over to my colleague Cynthia, and she's going to go over the systems.
Good afternoon, everybody, and thank you so much for taking the time today for joining Brittany and I in today's webinar. Definitely we're excited to be here with you today. So let's go ahead and begin this training session with a review of the two primary systems that all CCDF recipients must gain access to use on a routine activity, so to speak, CCDF grants management, day-to-day activities that are available to you. Now, we're going to go ahead and start with a review of how to gain access to the payment management system. For both of these systems, we're going to review payment management system as well as the grant solutions, and the difference between the two, and how to gain access to some of the reporting modules, as well as available documents that are made available to you through the grant solutions system that, again, assists your day-to-day activities with the CCDF grants management. Now, the payment management system is primarily where you can go to access your grant funds. So on the screen, you can please scan and or save the QR code that will take you to the PMS homepage. From there, as you see on the screen, there is a top menu in the landing page that guides you on how to request new user access. Now, this option has to be done from the landing page online. There's not an additional form that you have to complete and submit, pretty much like grant solutions. This is also done through setting up an ID.me account. I want to make sure that we understand when we set up the ID.me account that this is not an HHS user account profile. So once you actually navigate the user menu to request new user access to PMS, you have to make sure that this isn't an HHS account and that another one has not been established with the same credentials or same email that you've used for other HHS grant offices or awards outside of ACF. Now the ID.me account is intended to act as a single sign-on logging account. Most of us are familiar on how these actually work. This is the single sign-on for government sites that have that option available to you. It can be set up per individual user, and it doesn't mean that this, based on the credentials that you actually provide to set up access, does not mean that this account will be individually tied to you, even though you may go through the verification process by providing your telephone number and receiving text messages or going through the two-factor authentication apps. It just means that that's the way the system authenticates the login, the single sign-on for you. So just please, it's recommended again that it's not an HHS account that's linked to other systems or anything that you've used, like let's say a tax site for personal use, and that your credentials are unique to all ACF grant awards and programs. Now, once you've established this account, again, it can be used as a single sign-on with the credentials that can be linked across government systems that offer this option at any time. Next slide, please. Now on this next slide, you also have a QR code that you can please scan it and bookmark the link to the Grant Solutions website and landing page that you see on the screen. This is a step-by-step getting started guide on how to request the user account for both the Grant Solution system as well as the reporting module. The grant solution in comparison to the PMS system, which is where you would access all of your grant funds and accounts from a cash management perspective, houses your reporting. It serves as a reporting repository as well as any notices of award that you've received for all CCDF grant award actions. Now, these can include $0 NOAAs, constructions, anything related to CCDF award actions can be accessed here. They're stored in the system on demand for you to download them at any time. Now, I am aware, just going through some of the updates Grant Solutions is making to their functionality, there's an alert feature that is on and off turned on or is available to be turned on. So that way your fiscal contact who has registered the Grant Solutions primary account can access at any time, and they can be notified when any grant award actions have been issued. So that way they can quickly review them and download them for your team on demand. Now, again, in comparison to the PMS system that you actually follow the prompts on screen to complete the ID.me login sign on, and everything is just pretty much done from the landing page. To gain access to the grant solution system, you must fill out forms, and you have 2-step to take to actually successfully establish the grant solution profile. We can assist, the Office of Grants Management can always assist with submitting the forms to Grant Solutions and making sure that you've included accurate information so the CCDF grant accounts are linked and you don't have any issues with viewing NOAAs from the primary Grant Solutions page or user profile, and also reports associated with the CCDF grant programs through the reporting module, which is the online data collection repository system, excuse me, and that is housing all of the required fiscal report forms. The 696T form lives there, as well as some of the SF, the standard forms, 429s, and related attachments that are required to complete for construction. And we will go into detail of what that looks like later in this presentation. But again, if you have any issues, you can always contact the Office of Grants and we can go ahead and assist you with any issues or any communication delays. Now on the screen, you can go ahead and see the primary navigation page. It's the primary landing page for Grant Solutions. Once you successfully gain access to that, you may not see all of the icons that are listed in this slide, but at the very minimum, you should have access to GMM and OLDC modules. The GMM module is the one that is going to house your notices of award, and the OLDC is the reporting repository that is going to be utilized to complete the 696T and any other SF-429 related construction forms and attachments. We can go to the next slide. On this next slide, it's a really quick picture, a really good picture of how the form selection is laid out within Grant Solutions. Again, once you gain access to the account and the OLDC reporting module, you will be able to complete any new or revisions to any fiscal year report for all open grant years that your lead agency receives. That would be right here. Once you navigate away from the initial report entry section in OLDC, it brings you to this form selection screen, which you could see you have the 3 primary drop-down menus with the program name, the grantee name, and the report name. So in the drop-down, the program name is always going to be populated as CCDF unless we are, again, doing SF-429 forms, and we will cover details of how to view that reporting path later in this presentation. But at the very minimum, the CCDF program name should always be selected. Then you would go to the next menu and select your grantee name, which would be your lead agency name. And then the report name would be available now. So you could see in the screen, there are 2 selections that you definitely want to make sure that you pay attention to. It's the grant year 2020 and prior is the first selection, and that's if you have any open grant years or any fiscal year end reports that you need to complete for grant year 22 and prior. I believe for right now, or almost everybody should be just at grant year 2020 with a final report. And the second selection should be the grant years 21 plus. So in here, it is going to be very important because that you are selecting the correct report name, because we always hear from grantees, the common feedback is I cannot find my report, or if you're selecting or you're attempting to complete reports for grant year 21 through 23 or current, you're more than likely selecting the grant year 2020 and prior report name option. So the system is not displaying the correct report forms. But once you select the correct report name, you should be able to be in the right place for the right date and all of the open grant years that you could see on the screen and fiscal years available to report within that grant year on screen here. So this means also that you may have, as you could see on this particular example, we have grant years 21 through 24. Right now, you may have some, or primarily if you have any waivers available that have extended reporting periods or liquidation periods, may have you report beyond a 3-year window. So you may have for all open grant years, 3 to 5 reports to complete at any given time. Next slide, please. Okay, now 2 key takeaways before I turn it over to Brittany out of our systems is, again, the PMS system is where the funds can be accessed, as well as do any payment request or anything like that. And your Grant Solutions is the primary system used for completion of the report. So now I will pass it over to Brittany to guide us through the next sections of our webinar.
Thank you, Cynthia. Before we dive into the report itself, we're giving you like little sneak peeks. I wanted to review a couple of key terms that should sound familiar to you if you participated in any of the previous webinars. If you haven't, go back and watch those recordings because they go into much more detail around this slide specifically than I have time to go into today. So highly recommend. There's some really good resources that you can find on the previous webinars. But I do want to just cover this super quick. So obligation and liquidation definitions can be defined by the tribal lead agency using your local policies and procedures to determine whether or not funds are obligated or liquidated. If a TLA does not have policies and procedures pertaining to obligation liquidation definitions, then we default to the federal definition to determine if funds are obligated or liquidated. And the definitions are here on the screen. So obligations, orders placed, contracts, subgrants, etc. And then expenditures or liquidations, same, are charges that are made to the project or program, whether reported on cash or accrual basis. On your report, you're also going to see terms unobligated and unliquidated obligations. You want to make sure you have a solid understanding of what those two terms mean, as they do impact the requirements around obligation and liquidation dates. So when we're reviewing your reports, we're going to be looking at those lines. And so you want to make sure you know what those are defined as. I also want to acknowledge waivers. So obligation liquidation waivers have been granted for several grant years and funding types. So it's really important for you to maintain records of any waivers that you received or your TLA received. For most funds awarded, a normal obligation and liquidation period would be to obligate by the end of your second fiscal year and then to liquidate by the end of your third year. It's important to understand that as we begin to look at the report itself, as there are specific line items within the report where you're going to be reporting unobligated and unliquidated obligations. So knowing those deadlines will help you to feel confident that you're able to utilize as much of the awarded funds as possible within the deadlines that are outlined on your notice of award, official waiver notices, and terms and conditions. Again, highly recommend you take a look at our previous recordings on this to get more details on that. It can be tricky. So for this slide, we wanted to kind of pull out some of the line items that you're going to see on the report. So this provides an overview of the different uses of the types of expenditures that CCDF funds can be used for. Again, all covered on a previous webinar. So our first one that I wanted to pull out is administrative costs. This is captured on line 5 of the report. This includes organization-wide management functions of accounting, budgeting, coordination, direction, and planning, as well as in management of payroll, personnel, property, and purchasing, a lot of P's. Such costs can be for either personnel or non-personnel functions. There is a cap or a limit, and we're going to be talking about that on future slides. Direct services is captured on line 4. Tribes who receive medium and large allocations are required to spend a substantial portion of the remaining discretionary funds on direct care, child care services to eligible children. So we're going to review that as a spending requirement. Quality activities, that's on line 7 and 8. So the quality of childcare directly affects children's safety and healthy development while in childcare settings. And high quality childcare can be foundational across the lifespan of children. Tribal CCDF quality funds can be used in a really broad variety of ways to improve the quality of childcare, including for culturally relevant activities to meet the unique needs of Indigenous children, families, nations, and communities. Tribes are able to define what high quality childcare means and looks like for their programs. Construction and major renovation, that's going to be captured on line 9. So many tribal nations choose to use a portion of CCDF allocation funds to construct new childcare facilities, expand current facilities, or to provide critically needed health and safety updates to the spaces where children are receiving CCDF services. We're going to discuss later how to enter those expenditures for OCC approved construction and major renovation projects within the 696T. And then lastly, we have non-direct services included here as well. These are expenditure type that fall into, so these are program costs that are not direct services to families, admin costs, administrative costs, or quality expenditures. I've mentioned a couple times already allocation size. We wanted to include this really quick slide here because that does determine what spending requirements your TLA is adherent to. So to determine your tribal allocation size, you would need to look at the tribal lead agency's total grant year 2016 CCDF allocation amount. Looking at that amount, it's split up into 3 categories. We have small allocations, which means you could receive an allocation less than 250,000. Medium is between 250,000 and 1 million, and then large is more than 1 million. Don't look at your grant year 24 allocations to determine your allocation size because CCDF funding has substantially increased since 2016. If you are not sure how to find that information, then definitely reach out to your regional office or program specialist or our inbox as well, and we can support you in finding out which allocation size you received during that year. I called out a bunch of different lines. I just want to also touch on line 15. So this portion of the form is simply a vehicle for tribal lead agencies to request reallotted funds if they're available. They're not available every year. It really depends on the reports that you submit. So what happens is unused discretionary funds need to be identified by an April 1st deadline typically, as these will be reallotted into other tribal lead agencies in proportion to their original allotments. We will communicate with you if those deadlines change, as like this most recent deadline did change. But the ACF-696T reports, if they're not received within the 90 days after the federal fiscal year, which is 9/30, so 90 days after is typically in December, then you would not be eligible for those reallotted discretionary funds. So we really encourage you to submit your reports on time so we can move forward with that process. This year is a little bit different, but that is the standard process. Grantees who are incorporating their CCDF into a 102 or 477 plan need to inform the Office of Child Care if they would like to receive reallotted funds during the child count. Okay, we're gonna go more into depth around quality activities, administrative costs, and direct services, because these are the ones that have spending requirements attached to them that tend to be a little confusing for folks. We really wanted to spend some time on how you would figure out if you're meeting the spending requirements. So this is a chart that is split out by allocation size, showing the minimum, maximum, and the CDF spending requirements. Requirements are expected to be met on your final ACF-696T report, and I'll explain what a final report looks like in a second. So quality activity, improvement activities, you're going to see in this first column that all tribal lead agencies must use at least 9% of their CCDF funding to improve the quality of childcare. Additionally, tribes who receive a medium or large allocation have to spend an additional 3% on infant and toddler quality activities. So that's specific. So you have your 9%, everyone's adhering to that. Your 3% is for medium, or tribes who received medium or large allocations. In the middle there, you're going to see the admin costs. You'll see all tribes are adherent to this as well. So you can spend a maximum of 15% of your combined expended funds on administrative costs. The discretionary base amount, and I'm going to point that out when we look at the report itself, is not subject to this maximum. And then that third column is direct child care services. So only tribes who received medium and large allocations must spend a minimum of 70% of their remaining discretionary funds. This one's really tricky, so you have to be careful with the language. We're going to go through it in detail. So this is after funds have been spent on the set aside for quality and admin costs. You're adherent to that requirement. Tribes with small allocations are not required to provide direct child care services, so there's no minimum spending requirement for them. It's a lot of information on one slide. We're going to walk through it, I promise. All right, so we are talking about the ACF-696T, and you haven't seen it yet if you're brand new. If you aren't, you've seen this many times. So I apologize for the review, but what does this actually look like? So I know that the font is small, I really do. But I wanted to give just a snapshot of what the report itself looks like. So each tribe has their own personalized electronic form in OLDC, which is what Cynthia was talking about earlier, that they need to complete annually as long as the grant is open or until the final report has been submitted. Reports are meant to capture the spending that happened during each fiscal year. Reports are cumulative, which means that the information that you submit for 1 year of the grant will be included in year 2, and so on until your final report, which is where all funds should be accounted for. I'm going to pull up another image just because I want to be able to zoom in a little bit, because I want to bring your attention to the top of the screen. Let's see if I can get this to work real fast. I know it's white. Maybe it'll load, and if it doesn't, it's okay. Is it not going to?
Brittany, while we're waiting for it to load,
Yes.
I wanted to note that Hannah put a note in the chat. They reached out to Zoom, and I guess they have been having really difficult problems with outages in the last even 10 minutes. So the recommendation is to try to re-register and log in through the browser version. For those folks who are joining by phone, I know following these images is tough, but we will share a link to the recording and the slides after once we can get those out to folks. So if you're registered, don't worry, you'll get the recording. But in the meantime, you might want to try re-registering and logging in through the web browser. Okay, go ahead.
Thank you. All right, I rebooted the image, so maybe this will show up a little bit better so that I can zoom in a little bit more so you can see better. So Rachel, can you see this okay?
Yes, I can see it and it's all zoomy. Thank you.
Great. All right, so when you first open up your report, Cynthia had on the screen earlier how you would like see where your reports are. When you click either the edit button or the little eyeball, which allows you to look at the report, this is what you're gonna see. So at the very top of your screen, so I'm in the OLDC, you have your home, your form selection report, and then report status. Let me zoom in a little bit more because again, it's still pretty small. So at the top here, we're in CCDF funds, your grantee name would show up here. The grant period or the grant, yeah, and then the reporting period. So again, reports are every fiscal year. And then the report status. So what I wanted to show first was the report status. So when you open up a report, you press that little plus button, it's gonna start here. And that's where the green check marks will be. So once you begin inputting data and you click the save button, the report status is going to update and say you're in edited and saved status. So it kind of allows us to see where you are as far as how you're working on reports. But this is all in your control at this point. So when you save something, it's going to go to that status so you can come back to it later. Before we get to the validated status, I do want to mention that it is best practice to have a data entry person who will fill out the expenditures on this report. Once you're confident that those amounts are correct, you're going to validate it as a data entry person, and then it should go to an authorized official, which is likely someone different than your data entry person. So we're making sure we're getting 2 eyes on the report so that the amounts are correct. Whoever the authorized official is would then review it. Let me scroll. I lost my image. Oh, 1 second. Sorry. There it is. Okay. Once it's validated, then it'll go to the authorized official. They're going to review it and then they can put it in certified status. Once everyone feels good about it, then you can submit it. Once you submit it, it's basically sending it to OGM to say, hey, these amounts are accurate and we'd like to submit our report. Your grant specialist or whoever is going to be reviewing this report will click a little button that says it's in review status. That kind of locks in the information. And then it'll get either put in RO approved or CO approved. All that means is that we've accepted the report. It doesn't mean that you're good moving forward, because there might be things that we're finding in our review that need to be updated to make sure that they align. So it just kind of locks in the information. If you do submit it and it's in review or it's in one of these statuses, the RO or the CO approval, and you're like, we double checked our numbers, we need to fix something, again, send an email to that inbox, the OGM_OCC@acf.gov, and we will put it in CO status because that's the only status that it can be in order to get revised. So then you can create a revision to that report. You can make as many revisions as you need, but there's a lot of steps in this process to make sure that the amounts are accurate. All right, I'm going to get back to the PowerPoint. So now it's small again, I apologize. But I do want to point across the top here. I know you might not be able to read them, but there are these columns, columns A through G, and then there's going to be more on this next page. But those are your funding streams. And then on the left-hand side is the line items that we have been referring to. So when I was talking earlier, line 4 is direct child care services. So those are your lines, and that's where we're going to capture all of those expenditures from the funds that you were awarded from the columns. 2020 and 2021, we had some supplemental funds that were awarded. So we did include the second page because 21 goes all the way through column P. And so you may have received funds across many different funding streams. I do want to always encourage people to scroll all the way down because there might be a whole second page, especially in your grant year 21 reports, where you have funds that were awarded that you might need to report on. All right. So when looking at the report itself, when you're working on it, you might have some notices that pop up. Most of the time they're going to be information notes. This is just reminders that you have a spending requirement that is adherent to that line. So we have an example here. See a description for line 7, quality expenditure requirements. So you might be filling out an interim report, which means it's not your final. So it could be like your first year of funding and you've only spent a small percentage of it, and you go to submit it and this information tab comes up. That's just saying, hey, you haven't met your quality expenditures. That's okay. We're not expecting you to meet these requirements until your final report. I'm going to go into final reports notes in here in a second. But you could also have an error message that will come up. So information's green, errors are going to be in red. So something is wrong on your report that's not going to let you submit it. Sometimes you have negative numbers. We can't really have negative numbers on these reports. You could have accidentally put something in the wrong box and it's not able to calculate it. So if you're working on your report and you think everything should be right, but you're still getting an error, reach out to us. We'll try and figure out what's going on. Sometimes it's just an oversight. Sometimes we need to connect with the help desk to see what's going on. So this should look familiar. It's the top of the report itself, just zoomed in a little bit. There are a couple of boxes on the top right-hand corner when you're looking at it. One is the final report box, and then the other one is the submission box. So you'll need to check those before you submit. For the final report box, again, if you're year one and you've only spent some of your funds and you expect to continue to spend over the next couple of years, that's going to be an interim report. So you're going to hit no, it is not a final report. We're still spending down that money. If you're at the end of your grant cycle, so again, a normal cycle would be the end of 3 years, and you're ready to submit a final report, then you'd hit that button, and that indicates to us that you've spent what you want to spend, or all of the funds have been expended and you don't plan on spending anymore moving forward. So we can initiate our closeout review process. The final report is when we're going to start looking at those spending requirements. So that's why that button is really important. All right. For when we're looking at those final reports, there are some key things we want to note here. So again, all funding streams are complete. So columns in the report across the top, as I was talking about, are reported as expended, partially used, or fully unused. Again, there might be some situations where you're not able to utilize all of the funding that has been awarded, but we still need to fill out a final report so we can capture that. The tribal lead agency will make the determine during or at the end of the latest grant period on those applicable funds. Some funding streams may be completed at different times. So you might spend down all of your mandatory funds, but you still have some supplemental funds. If you are still spending down funds from other spending categories and other columns, then you're going to not mark it final until you're saying we're done with all of these funding streams. So make sure to track that. So you might finish your mandatory funds in year 1, and that number is going to stay the same because, like I said, it's cumulative, so it's going to track from year to year. Narratives. So narratives are required for grant years 2020 and grant year 2021 for supplemental funds. I'm going to provide more information on that on this next slide. But that is what you would need to include in the final report. Spending requirements have been met. So like I said, we're not expecting you to meet spending requirements on your year 1, year 2. Really, it's not going to be until your final report that we're checking to make sure that you've met those spending requirements. So that refers to quality services, admin costs, and direct services specifically that we're going to kind of go into more detail on. And then you want to also make sure that your reported data matches. So you're doing this report for the 696T. When we're looking at that, we're also going to pull up your PMS reports to see if the funding that you have drawn matches what you said has been expended. So you really want to make sure that those two systems are matching and lining up also with your internal system. So you want to make sure that that is accurate as well. I keep glancing to see if there's any questions yet, but I don't see any, so I'm going to keep going. So narrative reports, again, those are for 2020 and 2021. Submissions need to be included, or the reports need to be included as an attachment. So this is for years that tribal lead agencies received disaster, CARES Act, CRSA, and or supplemental ARP Act funds. So the annual submission of the financial report should include separate narrative reports for these. These describe the services and activities funded with each of the mentioned funding streams. So they're really important, specifically for OCC and ACF, to be able to utilize those narratives to capture the story behind how those funds were spent. So we can look at our reports all day and we see numbers, but we don't know what the impact was in your tribal community. So that's why we're asking for these narratives, because it's really important for ACF to be able to share that with Congress and others to showcase the amazing work that you're doing with these funds. You should provide an explanation for how those amounts were entered into specific columns. So again, by the funding streams. And honestly, it's a really great opportunity. I know I find it really helpful when I can participate in program meetings to understand the story behind how these funds were meant. So fiscal teams and program teams, sometimes we're a little detached because we're doing 2 different jobs, but this is a really awesome opportunity for you all to collaborate when you're working on these reports. This is just a quick summary of everything I just talked about and your checklist as you're going through your final report. So making sure all funding streams are accounted for, whether they've been fully expended or partially, that you have your narrative reports attached in OLDC. And actually I'm just going to pull this up really fast again, because I just want to point out this little button right here, view and add attachments. That's where you're going to put your narrative reports when you're ready to attach them. All right, spending requirements have been met. We're about to get into a lot of detail on that. The final expenditures match PMS draws, or if any unused funds have been reported, that those are remaining in PMS. And then that you've marked that little button at the top of your report, so we know that all of that you guys are ready to close that grant year. All right. Spending thresholds. So the spending requirements, we want to check to make sure they're being met. A lot of what Cynthia and I do when we're working with grantees is we'll go through and we'll do these calculations with you just to make sure that you have a full understanding of how to ensure that you're meeting requirements. So we're going to do that with you now, because hopefully you'll be able to reference this in the future. So when this is really honestly the most basic math we're going to be doing, which is really just to figure out the percentages of your expenditures. So we do that by adding up all of the expenditures for a specific category. So we've talked about quality and admin, for example. That becomes your numerator. You're going to divide that by your total expenses, which is your denominator. So we're going to go line by line in the report and work through each of these spending requirement calculations using very basic examples. So I do want to note that you might be a tribal lead agency who has repurposed funds, or you have disaster spending, or you have some special, Cynthia's going to talk later about reallocated funds. So make sure that, again, you review those instructions, because the instructions provide all of the information you might need that is applicable for you. We're going to use basic examples today, but review the instructions so you make sure that you're adhering to your specific requirements. All right, we're gonna start with line 5. So this is an example of how we're gonna do this. So for administrative requirements, you can spend up to 15% of your expenditures on childcare admin. Or to say it another way, 15% is the maximum of the total funds expended that can be used for administrative costs. So another thing we want to highlight with this requirement is that we do not include the discretionary base. So again, that's why it's really important to pay attention to these instructions. Because there are some columns that you are including on some calculations and some that you are not. So make sure you're paying attention to what columns are adherent to each different calculation. For this, like I said, super basic. So we're looking at admin. So we're going to look at line 5. We're going to divide it by line 12, which is your expenditures. So when you're looking at your report, this is an example we wanted to pull up. Like I just said, here's line 5. And then here's your line 12. These are the numbers that we're going to be utilizing. This applies for all tribal lead agencies, regardless of what allocation you received in 2016. And we're going to go through step by step. All right. What numbers do we use? So here, you're including columns A, B, D, E, F, H, I, J, K, L, and M. You can double check this because sometimes it changes by year, by grant year. And again, that is really outlined specifically in their instructions. Again, notice that we're not using column C here. So discretionary base funds are not included in this calculation. First step is we're going to add together the admin costs on line 5. Again, I know it's super small. You will have these slides, I promise, so you can look at it a little bit closer, but I pulled out line 5 from the report. We're not including, so this tribal lead agency had 46,000 about in column B, but it reported zeros in the other columns. It did report 30,000 in column C, but we're not using that for this calculation. So 46,327.68 plus 0, because we didn't have anything in the other columns, we're going to end up with a total of 46,000-ish. Then we're going to add together our expenditures. So we're looking at line 12. We did have expenditures in column A, B, but not the other columns. And again, we're not looking at C. So we're going to add those together. So that was 76,000. Plus the 249,405, and so we got our total here. So this is our total expenditures for line 12. Taking line 5 divided by line 12, so the 46,327.86 divided by 326,329 equals 0.1419, which just move that decimal point over 2 spots, and we know that that means 14%. Now, did that meet our requirement? It did, because 14% is less than the 15% maximum requirement. So this would be a green light for us on making sure that that TLA met the requirement. Fun little check mark. Okay, before I go to this next slide, because I know you guys are going to be receiving these slides as resources, I wanted a way to put it together all on one reference slide. So the next slide is literally going to be all of those steps that I just did put together on one slide. It looks a little crazy, but I wanted to make sure that you had this as a reference as well. So this is literally everything we just did. Looking at line 5, we're pulling out the appropriate columns to get our total. Looking at the denominator, which is line 12, pulling out the appropriate numbers to get our total. Doing the math, 0.14, which means we're at 14%. So we'd be good. All right, moving on to quality. Tribal lead agencies with small, medium, and large, so this is everyone, must meet this requirement. This is captured on line 7, which is where you're going to be putting all of your expenditures that you used for quality activities. Line 8, we're going to cover next, because that's only for medium and large tribes, is going to capture the quality activities for infant and toddler activities. So across the top, again, you're going to note that we have indicated what columns are impacted by this requirement. And then we're looking at line 12 for the total expenditures. But again, we're not using column C for when we're our base or our denominator here. Discretionary base is not included in the denominator. So for this requirement, your minimum amount is 9. So we're going to go through this example and see if this tribal lead agency met this requirement. All right, so we are using the columns A, B, C, D, and E, but specifically, we're going to show you which columns we're using when. So again, we're just adding up line 7. So we're adding the appropriate columns. So this lead agency only had discretionary spending, which is fine. Didn't have any mandatory discretionary base or any kind of repurposed funds or construction. So their total was pretty easy to find the numerator. We're going to add together line 12. And this is when you were not including that base amount. So 30,000 was listed here. We're not including that in this calculation. The same number we had in the previous example. So we're going to take $30,961.85 and divide it by $326,329, which gives us 0.0948, which is 9% if we wanted to round, or 9.48%. 9.48 is more than 9%, which is the minimum requirement. So we would give this report a check on meeting that standard spending requirement. I keep checking the inbox. Cool. All right, this again is just that summary slide. It's everything we just did in those previous slides. Taking it 0.948, they met the requirement. If it was 8.98, it's not above 9. So that would mean that they did not meet the requirement, and we would reach out to that tribal lead agency and ask them to make edits to the report to see if maybe there were some funds that was spent in direct care that actually could be qualified as quality, or maybe there were just to go back and look at your expenditures to see if there were some amounts that we can move into the quality expenditures, because quality, as we mentioned before, is a pretty broad category, and so sometimes we're able to make those determinations to get you up to that spending requirement. All right, I see for the numerator, if you had expenditures, yes. So in the numerator, we are including C, column C. Sorry, I was reading the question. Can you add 7C in for the numerator if you had expenditures? So for the numerator, yes. You just don't have it for the denominator. So you're not including it in your total expenditures. And honestly, that gives you a little bit of flexibility to meet those minimum requirements because you're including it in your numerator, but you're not in your denominator. So that number is a little bit smaller that you're dividing by. So it allows you to sometimes meet those requirements based on how you're filling out these reports. Okay. Very clear. If you are small.
Brittany, there's a question.
Yeah.
Do they have to match up to the percent exactly?
That's a great question. Thank you. So no. So you have to be, so the way that it's written is you have to be 9%, you have to meet 9%, right? So if you meet 9, like if you do your math and you hit 0.090000, you met the requirement. Again, if you hit 0.08999999, you did not meet that requirement. So it needs to be at that 9 or above. Hopefully that answers it for Jamie.
But to clarify, the
Yes.
9% is a minimum,
Yes.
and you can go higher.
Yes.
For the administrative expenditures, that's a maximum. So
Yeah.
you need to be at or under 15%.
Thank you. Yeah, if it was 15.1, we would take a look at those expenditures to make sure that you are not exceeding the maximum requirement. For these 9, you have to be 9 or above. I've had grantees that are reporting 30% quality. That's fantastic. That's you're meeting that because the requirement is that it's 9 or above. Okay, so infant toddler quality activities. This is for tribal lead agencies who received a medium and large allocation size in 2016. So if you received a small allocation, you are not required to meet these thresholds. Please feel free to stay on if you would like to learn more, because the next 2 spending requirements are going to be focused for medium and large allocation size. And if you have any repurposed construction funds, please stay on this full time. So if you received medium or large allocation, you must spend a minimum of 3 on quality expenditures targeted to infant and toddlers, which are reported on line 8 here. So this is an example we're going to use moving forward. Again, I'm just going to do the same thing we just did. So we're looking at columns A, B, C, D, and E. The top one, we're including your base. This tribe did not report anything beyond mandatory. That's fine. We're adding that together. Then we're going to add together the expenditures on line 12, excluding the base. We get 1.7 million. We're taking line 8 divided by line 12, and we got 0.0305. Sorry, 0.0305. That's if it was 0.030000, cool, you met the requirement. They did a little bit by a little bit more, so we would give this a check mark to say that they met that minimum requirement. I will go back to the allocation size once we get through this. But it's the small is 250,000 or lower, medium is between 250,000 and 1 million, and then large is 1 million plus. Here's a slide that just gives us the summary of what we just did. So pretty basic math here. This is when we get into a little bit more complicated, and I will try to speed it up since I know we're already an hour in and numbers get a little fuzzy. So your direct service spending requirement applies again just to medium and large tribes. So tribal lead agencies must expend no less than 70% of the aggregate amount of discretionary construction or major innovation and discretionary disaster expenditures for direct services after meeting the quality and infant toddler quality spending requirements and subtract out the admin activities. I said all that. I know that that is incredibly confusing, and we're really going to try and spell it out. So when you're looking at this, once all of the minimum requirements have been met, tribes must use 70% of what remains on direct services. Okay. When we're looking at the report here, so I have line 4 highlighted, but I also have these pink highlights for 5, 7, and 8 because this requirement includes those as well. And then we have your total expenditures down here. So this is the requirement that's spelled out in order for you to do your calculation. So we're looking at line 4, which is the direct services, columns B, C, E, and F. That amount has to be greater than or equal to 70% of, and then we've got this math that we have to do before we get there. So you're going to take 9% because that's the minimum requirement of your expenditures. Add that to 3% of your expenditures because that's the minimum requirement, and add that to your admin costs. Once you add those things together, you're subtracting that out of your total expenditures, and then you're making sure that 70% of that is being used for direct services. Again, there's multiple slides. We're going to walk by this. So here's a step-by-step of what I'm about to do. I don't want to spend a ton of time on this because we're going to do it in real time. But this kind of breaks up that calculation a little bit. You'll see this, the calculation is going to stay on all of these slides. So we're going to start with the step 1 is going to be line 4. So we're going to add together again, B, C, E, and F if applicable. Not everyone has your construction or discretionary disasters funds. So we're going to add that together first, using this tribe as an example. All right, so column B had $1.352608 in it. Column C had the full base amount, the 30,000, and that gave us a total of $1,382,608. That's our first step. Now I'm going to focus on this step, which is to take the minimum requirements out. So like I said, I've had some tribes that are spending 30% of their funds on quality. That's fantastic. For this requirement, we're only going to be applying the minimum requirements. which is 9% for 2022 and above. 21 is 8. There's a gradual thing that's all outlined in the instructions. But we're using 2020, 2022 and above. So 9% of your expenditures, 3% for the infant toddler, and then your admin cost, which is line 5. So columns, here's line 12. So these are the total expenditures. I pulled out each column. So that gives me the total here. Again, I am not using C because it does not include it in this. I'm using my mouse up here. Hopefully you can see my mouse down here. So I'm not including column C because that's not included in the calculation, even though it has the 30,000 there. All right, so now we can figure out the first step, which is the 9% columns B, E, and F. So I took the total amount, the expenditures, I multiplied it by 0.09 to get 9%, and I ended up with $121,734.72. I'm going to do that same thing, but I'm going to do it times 0.03 to get my 3% amount. I ended up with $40,578.24. And then that last part is the admin expenditures. So this grantee only reported mandatory funds, which is fine. But if you notice, we're not including column A in this calculation. So they reported zeros. So we don't even have to include an amount for that. So adding all of those three things together, we ended up with $162,312.96. So we did that last part of the calculation. Now we're going to do the middle part. So this is where I hope my colors are helpful. Looking at our columns. So yellow is going to be line 4. So that's the direct services that you expended, which we figured out on a slide a couple slides ago. Our total expenditures are columns, line 12, columns B, E, and F. That's in the green. And then the spending requirement total, which is what we just did on the previous slide, is at $162,312.96. So how this looks and putting it all together, taking your expenditures, you're subtracting out the minimum spending requirement total, and then that's giving us $1,190,295.04. Putting it all together now, 70% of that is 833,000-ish. Then we put it in the full category, and we've got, when you're looking at the top of the screen, that calculation. So does line 4, is that greater than or equal to 70% of the remaining funds, which was $833,206.53. Yes, it is. It's quite a bit more. So we know that that requirement was met. All right. We got through it. I appreciate your patience. It's a lot of numbers and it's very complicated, and I hope you are finding this helpful. The next slide is bringing it all together in the same way I did for the other examples, but it's direct services, so it's a little chaotic. But we did all of these steps, step by step, that you can see on the left-hand side. For this calculation, I wanted to know what was the actual percentage. And so you can literally take what we've been doing, the numerator divided by the denominator. This tribal lead agency was at 116%, which is greater than 70. So I hope that's helpful. I'm going to pass it on to Cynthia, and she's going to talk construction. So again, for those tribes that have the construction elements to reporting, please stay on, and hopefully Cynthia's slides are helpful to you. Thank you so much.
Thank you, Brittany. Okay, I want to review really quickly with you, since we have just a little bit of time left in our webinar, on reporting requirements for federal expenditures that are exclusive to lead agencies who chose to allocate CCDF funds towards tribal construction and or major renovation projects for all standard funding streams. This would also include grant years 20 and 21 supplemental awards. Now, the reporting information that we're going to cover in the next couple of slides, or in the section, is now in alignment with the report form instructions as well as OCC guidance, stating and or allowing lead agencies the opportunity to retroactively request the use of prior grant year funds to be used for the purpose of construction and major renovation projects. And when I say prior grant year funds, for most of you, that means grant years 20 to 23. Now, also a major change in the updated instructions for the purpose of reporting federal expenditures related to construction and major renovation is that now lines 9 and 13 have been open in the report form for all of those expenditures, as well as unliquidated obligations to be captured across all of the standard funding streams that Brittany just walked us through. So to go really quickly into the fiscal reporting requirements, I want to highlight there are two report forms and two report forms that are necessary to capture this information. Of course, the 696T is the primary one, as well as the SF-429A, B, and C, which both forms are due annually. Only attachment A for SF-429. So the primary distinction between the 696T financial report form is that this report, as we've seen, captures the federal expenditures for the use of the CCDF funds for construction and major renovation projects. And this is inclusive of the retroactive requests for all standard funding streams when construction dollars are approved, while the SF-429 forms and all related attachments capture the real property status. And what that means is they're sectioned off in 3 attachments. Attachment B is the request to encumber funds, the general annual reporting, which is attachment A that you see here on the screen. That's also due annually at the same time that you submit your ACF-696T. And a disposition request for all construction and major renovation projects, which is attachment C. Now, a quick highlight in between all of the attachments is the financial report form and the SF-29 attachment A are due annually through the life cycle of the construction and or major renovation project, plus the cover page. These are at 12/29 for all active projects, and the 29 SF-429 attachments B and C are only submitted once. So as I mentioned earlier in the presentation, we continue to work with our Office of Child Care Partners to determine the best reporting path for attachments A, B, and C. But as of today, the primary focus would be on attachment A if you do have any active construction and major renovations projects to submit, since that is capturing the real property status. Everything else would only be submitted once, and you can definitely reach out to us for additional instructions and help with submission of the form. Now, Brittany, I think we can go to the next slide to cover a little bit more in detail on some of the obligation, the retroactive, as we dive into the distinction between the general construction, quote unquote, general construction approved funds and retroactive and repurpose requests. Now I've outlined key things that we need to discuss. I'll review with you the obligation and liquidation periods, the retroactive request and repurpose approval, and what that means when you actually get into the financial report form to report federal expenditures, as well as unliquidated obligations for all construction projects. So for any, I'm going to start with the obligation and liquidation, just as Brittany walked us through the standard obligation liquidation timetable for all standard funding streams. This is specific to those funds that were retroactively approved from prior grant year funds. So when the Office of Child Care approved those requests, the obligation liquidation period for the originating funding stream was retained. So for grant years 20 through 23, for each of the standard funding streams that was requested and approved for retroactive construction, there wasn't really a new obligation liquidation. The originating funding stream carry through that obligation liquidation period. And that is also accounting for any fiscal waivers that were approved for that particular funding stream. Anything outside of those years, for example, for current grant year 24 funds and beyond, the 2-year, the 3-year obligation timeline with an additional 2-year to liquidate, the funds for construction and major renovation would automatically kick in because they were not included in the retroactive construction request and or would have a waiver that was approved to extend any of those obligation liquidation periods. So approval of the retroactive requests is relevant to us when we're talking about the ACF-696T and how we record the expenditures in the report form, because any lead agency who received approval for the retroactive request, the use of funds through a retroactive request, received it through a letter. So an actual notice of award wasn't processed. And what that means is when that notice of award is processed, the funds are essentially moved to the construction, each of the construction columns under line 2, which we're going to see in the report just really quickly. A snapshot of line 2 is an auto-populated line in the report that is capturing the total amount that was moved through a notice of award into a construction account in PMS, and therefore also populates that amount in the respective construction columns within the 696T. So because the retroactive requests were approved through a letter, the funds are going to stay once you get ready to report those in the 696T report form, beginning with this fiscal year. They're going to remain in lines 1 and 3, which is the authorized total for the award, as well as the total available. Forgive me if I don't have that immediate language, but essentially it will remain as the total amount of funds that were awarded on line 1 and the total amount that are available to be expended for retroactive requests. So you're not going to see them moved into a different column and or line 2 in the construction line item as you typically would for any construction requests beginning with grant year 24 and 25 for sure, I believe. So this is particularly applicable to the retroactive requests. So with the retroactive approval also comes the retroactive repurposing of funds. And because the retroactive approval, again, is not provided through a NOAA that actually shifts the funds between the regular standard funding streams and the construction accounts in PMS and in grant solutions. The retroactive repurpose funds will remain in the funding stream. So one thing that I want to make a big highlight of any of the requested funds here for construction and major renovation and retroactive can be used for other activities without the need of having to submit an application to the Office of Child Care for approval. However, it's going to be very key that you keep a very clear internal record of how you're spending the funds if they were retroactively approved. And let's say 2 years into your construction project, you decide to move retroactive approved into a repurpose for other CCDF activities across categories. That's going to be tracked internally because the way that this is going to be captured in the 696T is going to be exclusively through lines 9 for retroactive construction, as well as line 13A and B for all unliquidated obligations. So anything that was repurposed within the retroactive, because it's not moving an account, you have to keep that in very close monitoring through your internal financial ledger system, system of record of how those funds are being used for other activities that are not just specific to construction. Now, following this, just want to highlight the primary thing in the 696T as of today, the primary change is the reporting requirement for line 9 and 13. So lines 9, as Brittany walked us through, the various columns, we now have that line open for columns A through P. And thank you, Brittany, for putting that that visual on the screen, that you can use with the exception of the regular columns. As you can see, the expenditures for construction and major renovation is line 9. And in the same screen, you can see the breakout between line 13A and 13B, which 13A would capture all on federal obligations that have not yet been liquidated, excluding construction and major renovation, because you're capturing those in line 9. And then the total federal obligations that have not yet been liquidated, including construction and major renovation expenditures across all funding streams in line 13B. Primary thing also to note when reporting, two things that I want to make a note of when reporting federal expenditures for constructions between lines 9 and 13. And the reason for line 13 reading unliquidated obligations is going back to the approval to use or repurpose any of the funds or any other retroactive requests for the use of CCDF dollars for construction. On
Cynthia, I think you're muted.
You muted yourself.
And now oh,
We cannot hear you.
Cynthia, we can't hear you. Okay. Cynthia said, it looks like she said 1 minute.
Maybe while she's working on that, if there are any additional questions, if you want to throw them in the chat, I don't know if we'll have time to take live questions. But do want to encourage you to put them in the chat. Again, you can send fiscal related questions to that inbox that we've mentioned a couple of times. That should be the last chat you see on your screen. So definitely follow up with that to see, or with any questions that you might have. Thanks, Rachel, for putting that again.
can you hear me now?
Yeah, there you are.
Oh, yay, confetti. I apologize for that. All of a sudden I didn't see screens and I was just talking as of reporting requirements for line A to B. I have to love technology, but as we wrap up, so another big thing that I wanted to state on both of those lines. Again, line 9 is to be used, and I'll make this quick. Line 9 is to be used for all retroactive requests, all of the funds that are expended. Now, two things I wanted to highlight earlier before I just went dark was the approval of the funds. You are really not submitting or reporting expenditures in the 696T until the funds are expended. All of those funds should be really, if you have unliquidated obligations, they should be recorded on line 13B. Because as a reminder, you're not able to actually expend funds without approval without receiving OCC/ACF prior approval of the application. So really, whenever you're looking at these two lines of total federal obligations for construction and major renovation, that's a total outline. When you're logging in any or completing any data for expenditures for line 9, those are actual expended dollars after you have received approval on your construction application. You are not able to actually record expenditures prior to that because you have not been given authorization through the application approval process to expend those funds. So anything should really be, anything that is pending should really be recorded on line 13A for construction and major renovation. And if you, I want to also make A quick note that unliquidated obligations, that line that we have on prior year reports, has been replaced with 13A and B. But essentially it's the same concept. You have obligated dollars that have been approved for retroactive construction that you have obligated to a project, and you're just waiting for ACF to provide approval for your application to begin those expenditures and to begin recording those expenditures in line 9 and or 13B as such. So other than that, you will always, until you receive the approval, you will record them on 13A, and that would follow the quote unquote unliquidated obligations. So those obligations that have not yet been paid out for the purpose of construction and or major renovations. And I think we can quickly go to the next slide, Brittany, just to show a visual of lines 9, but I think you did a great job zooming in to see it better than the tiny screen that we have on our slides. So I think we have a pretty good idea of what line 9 as well as lines 13A and B. If you want to go to the next slide, what that breakout looks like for each of the standard columns. The only one that should be grayed out in this report form should be columns D and E, I believe, which are the general, the standard construction. And those columns are reserved for those awards that have actually been transferred to a construction account. So, and with that, I think before I had my technical issues, we were putting our thank you. I think we have reached the end of our webinar. We definitely are here to support your process, whether you are reporting construction, major renovation, you are calculating all of the spending requirements. And another thing I want to mention, now that I did say spending requirements, on the repurpose dollars, the spending requirements Brittany walked us through are kick in on the final report for all retroactive repurpose dollars as well. But again, you don't have to meet any of those requirements until a final report. So as you walk through completing the 696T for construction and major renovation expenditures, just keep that on the back of your mind, because that same CCDF spending requirement applies to retroactive construction and repurpose dollars. So retroactive repurpose funds. No, it's a mouthful, but again, thank you so much for joining us today. I think we do have additional slides with available resource for you. These are a great go-to if you have any questions regarding the Office of Child Care, any of the reporting resources, any of our systems, gaining access and additional guidance and the purpose behind the systems that we used, which we covered earlier, as well as some regulatory requirements and additional references for you to have handy.
And we know that a lot of this was heavy. We know math might not be everyone's cup of tea. That's fine. We're here to support you, but also TCBC has a lot of resources, and always reach out to your program specialists as well, because we all work together internally to make sure that we're meeting your needs. And definitely want to make sure that if there's something that you need or that you're missing, that you have it. So definitely keep that communication open with us so we can continue to improve the resources that we're able to provide you.
And Brittany, I think we have an additional question, but I am not sure we're able to address it, from Deanna asking related to the requirements to write a justification on the payment drawdowns.
I think we're working on a response to that, so we'll be in communication. But thank you for uploading that question, and we know we'll try and follow up with that. That's it for us. Really appreciate your time. It was a long webinar, and we hope that you are able to absorb it, come back to it, look at these recordings, look at all the other resources as well. So thank you all for your time, and have a good rest of your week.